Good morning, traders. I'm going to do a little top-down analysis for Nasdaq and ES. We can get an idea of where the market might be heading as we're going into next week. To do a top-down analysis, we start with a monthly chart. This is as far back as TopstepX will go. I remember all of this. I was trading that craziness. This is where Trump announced the tariffs last March and April. It was the shortest bear market. We just really sold off. And then since then, we've pretty much been cranking up. And we did leave a couple of fair value gaps on the monthly chart here. Now, this was a nice little push down this month, but we did take out all of these lows on the monthly chart. Is that as far down as we want to go? Who knows? I know we have this fair value gap right here, then it could be traded into. Most definitely. We've taken out that monthly low, pushed a little below it. Right there is the high of that fair value gap. Go ahead and mark it out. I would put, for this, I would just write monthly FEG low. Those are important levels because it could just fill that fair value gap, and then that's where it decides to pop. On the low side, I think those two levels are really important. From once we have the monthly levels marked out, then we can go to the weekly and see if we can get a little bit better picture here. So these are the relative equal lows I felt was a target on Friday. If you watch my video at the beginning of last week, I mentioned those as a target for this week. And then here we have this weekly fair value gap. The monthly fair value gap low is right here. The weekly is a little bit higher. The high of this candle right here would be the bottom of the weekly fair value gap. And the high of this candle is 22,926 quarter. So just below 23,000. I think that could be our target right there. 22,766. I'm going to move this up to there. I mean, we may end up offering lower, but I'm going to move it to there, and I'm going to relabel it as the weekly FEG low. I really like the fact that it's right at 23,000. That would be a psych level. Weekly FEG low. I like the idea of that we fill this weekly fair value gap on this push down. That'll dip us just below 23,000 and then start offering higher. On these, this to me looks like the liquidity was taken. And we would have to trade all the way down into this fair value gap, which is possible. But man, that would be one crazy sell-off. That would be definitely the AI bubble busting in order to get us down that low. So those levels I think are really important to get on the chart. Now, another thing I like to do is I use this Fibonacci tool. I do not use Fibonacci numbers. But what I do is just to get an idea of where the market may trade to as we're pushing down. Whenever we pull back, the halfway point of any candle, so this would be like a yearly candle, really. The halfway point is a point of contention. So in this, instead of using Fibonacci numbers, I just break it into quadrants, 25%. And so the halfway point aligns very well with this monthly low right here. Let's go back to the monthly and take a peek at that. Right here. So it would fill this fair value gap, work into this one possibly, and that's where we would reject, take out that monthly low. So I think this monthly low is definitely a target over the course of the next, well, it's a monthly candles month. Let's say the next month. That could be where we could offer there this week and reject and start going back up. But I think that one is definitely a target. So let's go ahead and get it marked out with a little more information on here. Monthly low, and we'll put 50% retrace as well. So yeah, I think that one's the one I'm thinking is the one. Might even make it a little bit bigger just so we know when we get there that that's an important level. 2-2. Yeah, I changed the coordinates on that one, so it's exactly right. It's low of this candle is 22.0, 76 half. Mucho importante. And also another thing you can do is the 25% extension of the range would be our aim point for when we start going back up. That's kind of a neat little trick that I learned along the way from ICT is a guy that I started listening to April 2 years ago, and I've been trying to learn his strategies. I actually learned the strategies pretty well, but over leveraging and things like that have prevented me from being as successful as I want to be. But I believe I've got all that fixed now. I'm not doing any more over leveraging. I created a little scaling plan. If you haven't seen that video, I think that is the key to all of our success is keeping our size small until we can safely size up. And I actually listened to a video yesterday, a guy kind of same boat, trading for years, do great, and then one day wipes out all of his profits. And so he made the change and he's doing the micros, and his scaling is similar to mine. I think he's a little more aggressive, but probably not. One micro for every $1,000 of drawdown is all you're allowed to get in a combine. And in an XFA, it's one micro for every $2,000 worth of drawdown. And I would say with ES, you might be able to go with two micros because it doesn't move as much as NASDAQ. But if you're trading NASDAQ, one micro for every 1,000 of drawdown will keep your account alive. When you get your XFA, the purpose of it, you want to keep that account alive. You want to live to trade another day. And so I think that's really important, sizing down on these things so you can actually make money. Does no good to have a $5,000 day and then blow all $5,000. It's just mentally, because of one bad day, it's just mentally draining when you do something like that. But I digress again. So here we go. I think that's our target right there, just looking at this chart. From a weekly perspective, it would be another set of these relative equal lows. Man, it could even come down into this, huh? That's interesting. Well, if it gets here and it wants to dip a little lower, down to 21,638 into that fair value gap, that wouldn't surprise me either. But I think that is definitely our short-term target. I think this one is probably the target for maybe this next coming up week, and then followed by possibly this one and even that one. Might go ahead and mark that one as well. And I'll just make it normal weight. And I'm going to label it weekly FEG high. Or top. If you don't know what FEG is, it's a fair value gap. A fair value gap occurs when you have this big green candle And this red candle did not push all the way to the top of this next red candle, creating a gap in the sell side right there. And same as here, the bottom of this green candle did not touch the top of this green candle, so it created a bullish fair value gap where there's no sell side in between. That's different than a market gap where we have a gap in the open and the close. Man, this was a tough trading time. We were up, down, up, down, up, down, up, down. All right, so now we got all that. Let's go to a daily chart, see what that looks like. We chopped city, we've come down, we swept that liquidity, swept these. We got fair value gaps on the daily chart. I don't know for sure if we're going to trade down this low, to be honest, but that 50% level is the only reason I have that one. But if we could get through that consolidation, I don't know. That might be our aim point right there. That might be it. It'd be nice if it got down that low, because that run back up is going to be sweet. So if we look at our normal progression of a reversal pattern, we go up, we make a high, and we're looking at a 1 minute chart or a 5 minute chart. We try to make a new high, fail. One more, run that liquidity, and then let's start working our way down. Lower high. I would be looking for a fair value gap to the downside, and we got it, and it's been respected. And then we start offering lower. So the near term liquidity we just swept. When we sweep liquidity to the near term, we typically trade back up. Maybe take into some of this fair value gap before offering lower. So hypo for this evening is that we would probably try to offer back into this for a minute. May not, may just continue down, but we may try to offer up a little ways, at least half of this daily move before continuing on down. We did this little blue box represents a gap in the market. We have two of them. We go to the 4 hour, we can see we opened with a gap down on Friday and then just continued down. On the smaller time frame, I think the gap is a little bit better marked. Yeah, so our close was right here at 3:15 on Friday. It was right at the top of that green candle. That's where the candle closed, and this is where we opened, and we just went straight down from there. So this is a gap in regular trading hours. Price action. So maybe we could offer back up into here. That would take out the high of that fair value gap, or the low rather, and then continue to offer lower. Or maybe we just continue to offer lower, and this is a target for later. So we have two gaps in the market right now. One there and one there. But I think these are going to be saved for later. I think we're going to continue to push down, but we should run a little bit of this liquidity up top prior to. Maybe break and retest of this consolidation here. That would put us up to 23,450. Or maybe we fill the whole gap and then offer lower. I do think a sell-off is... The sell-off we already had was plenty good, but I think we're going to have a little bit more sell-off. I like that 50% retrace really well. So coming into the open tomorrow, I would say if we open with a gap down and continue to push, fail to make a new high and continue to push, just jump in with a micro and start aiming for these levels. That's our first target, 22,931. Good psych level. All right, so put up a daily chart and just looking at this daily candle from the regular trading hour perspective, just the movement, regular trading hours, not including the gap, a 50% retrace of that puts us right at the bottom of that consolidation on a 15-minute chart. And so if we're going to pull back before pushing lower and leave this gap open, that's our target for upside there. So I think that's an important level to mark on the chart as well. Just be a 50% retrace of Friday. I usually make it a yellow one. Just that's what I always mark my CEs with, is yellow. ICT calls those a consequent encroachment. I just put 50%. Now, you could use the entire daily candle. I think it's going to work further up into this gap. But I just like to use regular trading hours. But you could extend this up, this fib tool. It's going to work into my gap. But you could put it all the way up here, and that would put the 50% level closer to the gap. But I'm just going to stick with the regular trading hours and just kind of watch it. I would like to see it, just to go to the bottom of that consolidation, like a break and retest, and then continue to offer lower. Now, on the daily chart, as we're looking at this weekly low, maybe it's just so close. It's only 300 points away, but we do have some daily lows here that we should see a bounce when it hits, a bounce back up. So don't panic when it hits those. If this is our target, it's going to get there, but it may bounce at each of these. And maybe even that one there bounce up. Maybe we just chop and then offer lower. But I think this weekly fair value gap, filling that sucker, is definitely a target as we head into the week. So I'm going to leave it right there just for a second. You can screenshot it or whatever. Get rid of this fib tool. There we go. And, get your settlement marked. 50% retrace of Friday, 50% retrace and monthly low. I think that's really an important level as we're heading into the following week. Now let's look at ES and let's see what kind of business it's got going on, because these things run in tandem. So you can see very similarly, price ended right here at these relative equal lows on the monthly chart. And then we also have the fair value gap here. We can mark that fair value gap low here. I'm just going to put a line there for now. I'm not going to type anything into it. Just make it a red line. Because once I get to the weekly, we may be moving it. That's the fair value gap low, and then this would be the low of June. Right there. And I will put monthly low on there. Because that one's not going to be changing. I'll go ahead and mark it, but I might change it. So the market moves to inefficiencies. This is an inefficiency, sell side. Only buy side has been offered in there. So inefficiencies and liquidity. This would be the inefficiency. This would be the liquidity. And then there's more inefficiency here. We could go all the way to the top of that red candle on this push down. Let's see what its 50% retrace looks like. From the bottom of that run all the way up to the very top. that candle would put our 50% retrace right here. Corresponds perfectly with what we saw on the Nasdaq chart. So that monthly low dipping into this fair value gap, what kind of a psych level is that? 6,000 is just below it. It would fill to that. I like that possibility. That's a big psych level. Big psych level. And the sell-off we've seen in gold and all, man, that's a big that's a really distinct possibility. So the halfway point would just dip into this fair value gap, leave part of it open, and then we start heading back up. And if we fill this fair value gap entirely, that's going to put us right at the 6,000 level. Now, this is the course of a month worth of movement, or it could be, we're not that far away. We're at what, 63, right at 6,400. We're at 6,400. So we would need to drop another 400 points. 100 point days in ES have been happening rather. I don't think that's the ATR, but it has been happening here recently. We can look at the daily and just measure out some of these daily candles and see what kind of a drop we're having. See, that was 162 points on that day. This was an even bigger push back up. This particular day here, 200 point move on ES. That's a big day for ES. So maybe it takes a week or even longer to get here, but I think that is going to be our target. The equities align from a daily perspective. We've left this liquidity and we need to offer back to it. Could even offer down to this one right here. That I really like that level right there as a filling that inefficiency, even a little new day opening gap there. I really like the possibility of that. So let's look at the weekly just briefly here. There's that monthly low. Yeah, I'm going to say that would be our low hanging fruit, and we might possibly even trade down to here. So I'm going to label this one as monthly low and 50% retrace. I think 6,000 is where we're headed. How we'll get there, who knows? But I think that's where we're headed. And then once we get there, whether it takes a week or a month or 2 months, then we're going to start offering higher again and start taking out some of these gaps we're leaving in the marketplace. But yeah, this level, definitely put that on your chart. But my pie in the sky is this level right here. And it would be a weekly FEG. Was it weekly or monthly? Let's go back and look. Monthly FEG low. Big psych level. Okay, there we go. So that one I'm going to put a little extra weight on as well as my possibly. So in the near term, like say Monday, maybe we work down, we pop into this, pop back up. and then we come down a little further and maybe pop back up. Or maybe we just start screaming all the way down, take that, and then we go back up. Who knows what it's going to do, how it's going to get there. But these levels right there, get them on your chart, guys. One thing I've become pretty good at is calling out price levels, or marking them out. Now, you can see these wicks each day. We come down, here we push up, and then we come back down. Push up, come back down. That may continue. We may push up and fill this gap and then come down. The market usually will go up before it comes down. So let's look at, we could do the whole week here and put a fib on the whole week, just the way these others are looking. But I think the aggressiveness of Thursday and Friday, I don't think we're pulling back to half of this week. On these, we pulled back to 75% of the week. Look at that. If we did this candle here, a little bit more than half, almost to 75%. And then this candle here, this week's pullback, 75% of that prior week. So if we continue that trend, we would pull back all the way to here, or possibly here, fill this gap, and then offer lower. But I just think the aggressiveness of the move with the gap down, I think we continue. We may take back half of yesterday, half of Friday, but I don't think we're going to offer all the way back to 50%. I think we're going to leave that gap open. But, you know, as I always say, the market doesn't care what I think. So if we pull back half of Friday, that's the whole daily candle. If we leave this gap open, then we'll just be dealing with regular trading hours only. And half of that would be the bottom of this gap. And it would be the top of that 4-hour candle right there. I like that level for the pullback. So we're going to mark that. We could just mark it as a 4-hour high. And then we can also put 50% of Friday. I like that level a lot right there. And it could be a big blue one. It doesn't have to be. That would be sweet. Okay, so the hypo would be we open Asia. Maybe with a gap down, maybe not. I would think if we open with a gap down, we're looking for a lower high and then a sell-off. But if we open at settlement or near and start working our way up, that's our target. When we get there, we should see it pop that, maybe a little volume increase showing a little run on liquidity, and then push down, try to push back up and fail, making a lower high, and then fair value gap to the downside, and we start working towards this level down here. It's just not that far away. Well, it's 200 points away. So I don't think ES will get there in one day. It could if we have another sell-off. Usually after a big day like that, we chop around a while. So maybe we just pop there and then start taking out. I mean, we got to go all the way back here to find these liquidity levels. But maybe do we have a gap in the market here that never got filled? We have one that wicked into it there. We have a gap here. That'd be the good midway point. Right there is a gap in regular trading hours action, and also here. Both of those are draws. So maybe we mark this out right here as a possible point, midway point that we would trade to if we start offering lower. That's not very far away from the current price at all. From settlement, ES could definitely make a trip down there in a day's time. That's only 81 points. Definitely. That would fall within its ATR. So, yeah, I like that. I like that level right there. Um, that would put us at 63.21. If we go to the low of that, that would put us at 6,300. I like those levels right there too. So yeah, that's my top-down analysis of ES and NQ as we're heading into the week. If, when the market is heading in a particular direction, it does like to run liquidity before, like if it's going down, it likes to go up and run liquidity first. And so that's our most recent liquidity right there on ES. And then we would offer lower. I don't think I looked at that on the NQ, and so I want to look at it real quick before we go. Let's do the 4-hour regular trading hour. So it will also correspond well. The 50% retrace of Friday's regular trading hour price action is just above that 4-hour high. And so we will mark it as a 4-hour regular trading hour high. Yeah, I really like that. I really like that hypo. Usually when I get into this and I see that, I get kind of excited and I'm like, okay, that's going to happen. And then when I see evidence that it's actually happening, I want to load up and just really throw the kitchen sink at it. And I get my butt handed to me. So any analysis you do, always know it could be wrong. You could be 100% wrong. It could just go all the way up to the top from here and fill both these gaps. And we just do nothing but trade up from here, go make a new high, all-time high. So don't ever throw the kitchen sink at something thinking you're right. Don't ever do it. Just get in, trade your normal position size, normal scaling, and if it's going to work in your favor, you're going to have a real good day either way. So 50% retrace of Friday would get us to here, taking out that 4-hour high. That corresponds well with what ES could do. I like that. That's my number one hypo. We open Asia maybe a little above settlement, and we start working toward these levels. We put up a lower high, try to push higher, fail, fair value gap to the downside, and we start offering lower, possibly all night long. Get down here, New York opens, we go back to settlement, and then come back down to here. Now, one thing I did want to check on here, do we have any gaps in the marketplace? Say we don't get all the way down to here. I think oh man, that weekly fair value gap low is right in the middle of that same feature on ES, a gap in the marketplace. Man, I'm really liking that. I really want to throw like a mini at this sucker and make 10 grand, but I'm not going to. But we're going to highlight that. This is a regular trading hour gap. Big draw, big draw. That means no business has been conducted during New York session during this little time frame. Now, because it occurred way back, when did this occur? June of last year. Does that mean it doesn't matter anymore? Possibly. Possibly. It may not make any difference at all. But I'm marking it and I'm saying this is our lower target for Monday, possibly not Monday, possibly we chop Monday and then go down here for Tuesday. But this is definitely a target as we're heading into the beginning of next week. That's my best top-down analysis for you, folks. Get those levels marked on your chart. I'm going to move ES over here where we can just see them both side by side. 4-hour regular trading hour. I just think that right there is money. That is the money move right there. Push up, take out this 4-hour high, come down to this gap in the price action right there. You know, this one on ES, there's another one here that corresponds with that monthly low. That's just a long way for ES to travel in a day. That would be nearly 200 points. But yeah, this one could also be a draw. But I mean, if you're putting on 2 micros and you're letting them run, you could possibly aim for here on ES. Why not? One more thing I'm going to check before we go. I don't think it's going to show up over there on your screen. Hey, it worked. Do we have any news? No news Mondays are usually chop days. But tonight, Asia session at 5 o'clock, we could see some fireworks. 6 o'clock New York, we could see some fireworks. So get ready for that. Oh, crap. Fed Chair Powell speaks tomorrow at 9:30 a.m. All bets are off, guys. No, those levels are still good. But when he talks, the market reacts in a bad way. So let him finish before you try to trade tomorrow morning. 9:30 a.m. is Central Standard Time, so that'll be 10:30 New York time. So yeah, that could affect us. That definitely could affect us. Well, since it's showing me all of that, I'm going to put a link to this